Well, I'm going to the city and I'm gonna do a steady show. And I know all my fans wanna learn how to make some dough. I've been cruising up and down for trades each and every night. And with my iPhone reclining, I know we're gonna get it just right. I'll get inside your mind, we'll have a real good time. We're gonna trade today, we gotta trade today. Go askSlim.
Hi, I'm Steve Miller. Call me Slim. And this is the askSlim Market Week. It's a look back at what happened in the financial markets in the past week, and a look forward to what might happen in the next week. And hopefully lots of great ideas and opportunities for you throughout this show. Well, the stock market, the great bull run of 2019, took a pause midweek, only to come surging back here on Friday afternoon. The Amazon effect, we'll call it that, but a little bit different this week, as it was reported that Warren Buffett had invested in Amazon, and we got strong payroll numbers here on Friday, which also helped the market. I believe it was Warren Buffett's proteges that decided that since they missed the move from $1,000 to $2,000, that now is the time to get in, as Warren Buffett has simply said he wouldn't invest in a stock that was that highly valued, but now they're in it, and that helped the market, certainly pushing up the NASDAQ. The payroll numbers, they were much stronger than expected, 263,000 versus 190,000 estimate. The U3, that is the unemployment number, falls to 3.6%, nearly a 50-year low. You'd think that the bond market would get hit on that news, but bonds actually rallied along with a surging stock market because the Fed heads were out there speaking, and they were dovish. So you can't really scare them, no matter how strong things get. They really want to stay on this pause that they're on, and want to help asset prices go up. Then we all feel richer. Midweek, we did see a dip in the stock market that looked pretty bad on Wednesday, as we had a big reversal after the FOMC meeting, and then Thursday it followed through on the downside. That was a pretty sizable dip that we saw in the market at that time. Powell, he came out talking, and that was really mixed. They said, of course, that they're still going to be patient. They said economic activity is strong, but the consumer and business activity is slowing. So there's that mixed news from them. Two phrases, I think, is what came out that caused the break in the stock market at that time. Powell said that stocks were elevated, though not indicating that they were at any extreme. And when he was talking about inflation, he said inflation is still low, but indicated it would pick up. His favorite word is transitory. It's almost Greenspan-esque, as it's one of those words you have to really look deep into to see what it means. And essentially he's saying that though inflation is low now, he's expecting it to pick up. Investors, of course, heavily committed, heard this as no rate cut, as they were hoping for more of the drug that they're used to getting, that stimulus that they're hooked on, which is low interest rates and debt. More debt and more debt, like there's no problem in doing that. And this is a new Fed who's out there simply to erase the economic cycle. So far, they've done a pretty good job at that with a slow growth period in these last 10 years, and asset prices, well, that being the inflation that we see here as the stock market has gone from 666 on the S&P 500 all the way up to the 2950 area. So it's been just a historic move that we've seen, and it's, of course, only these asset prices, and the rest of the world is in a very significantly slowing period and has really struggled. And they're at interest rates that are simply extraordinarily low or negative, and the amount of debt out there that has negative yields is, well, incredibly scary. Earnings also coming out still this week and bringing some big moves, but slowing down a little bit. Two of the FANG stocks had big moves. Apple moved up 5% and didn't really help the market when that news came out. Their services and wearables sectors of their business really vastly improving, and that's covering up the fact that iPhones are really slowing, and that's of course their big margin area. So there's a lot to look at in these Apple earnings that maybe to be skeptical about. However, lots of analysts out there putting really high numbers, 300 plus on this stock, and I just don't think they're right. On the other hand, Google or Alphabet comes out, and they had their worst week maybe ever, I think it was. It was just a huge decline. The stock was down 100 points, and I'm going to show you that in our worst of the week coming up later in the show. Our analysis for the stock market was for a correction to have started long ago, and that it would decline into May or maybe early June. Well, so far that's not happening. The market, though stumbling a little bit this week, really has not given a strong indication of a top yet. And when you get a rally that extends this far, it essentially shortens the duration of corrections. In other words, I still think they're going to go down in May, and I think that what we saw was the beginning of that stumble this week, even though we have this surge going on. But the timing remains the same. We think it's just going to be sharper and quicker, and that it's going to not last long on the downside and then reverse back up. So we think Wednesday of this week really started it. We're going to look for this Friday rebound that we're in right now not to last long. I'll show you that in the short-term view. And then we believe the risks are pretty good for a correction to come in for the next 3 to 5 weeks. But overall, we think that's going to be a buying opportunity, and that the markets will be able to move higher into late summer and into fall. All of that, because of this immense strength and extended rally, does affect the patterns, strong momentum, and we're going to read that as it is. Stock market really only up slightly. It was narrowly mixed just when I started to put in these numbers here around midday on Friday, and now moving a little bit to the plus side. The indexes have struggled this week, but this Friday is helping. The bond market down a few ticks on the week, and like I said, ZBs, ZN's a little stronger, and that's even in the case of the market having this big rebound. The Fed just is talking those up. And the TNX, which is the 10-year yields, down about 2 basis points on the week. Gold is down about $7 on the week, and it's rebounding strongly on Friday, but had a pretty bad day on the Fed day. Dollar down about 0.5% on the week, and we did expect that. That's trading nicely with our patterns. Again, we'll show you that, and a total of 5 markets in our short-term view coming up at the end of the show. Oil down about 50 cents, and from peak to the little dip it's had in here was about a $5 drop on the downside, and that hit our downside targets right around 61. You'll be really interested in seeing all of that as we move forward. That's the opening, and I'll be right back with some very interesting best and worst stocks for the week. All right, for the best stocks for the week, we're going to look at do things a little bit differently here, is that I've switched now to doing what I think are the 5 best opportunities or important patterns that I'm looking at for both the best and worst for the week. But before that, I want to make sure you follow us on Twitter at askSlim and become a YouTube subscriber. That really helps us. And of course, I want to tell you about our membership. Our membership, you're going to see charts right now that are cycle analysis. Our analysis is much different than most other analysts out there. We look at time and price, and you can only do that really with cycle analysis. And it's really an incredible different way to look at the markets. And when you get accustomed to it, you'll never look at charts the same way. You can get our charts. We do. I do this work on about well over 300 different symbols. And our focused list of rankings and trade setups is the 80 key stocks and ETFs and futures that if you trade in that group, you'll never need to trade anything else. There's just so much in there, and very optionable symbols that we look at. And we do weekly and daily analysis on that, and analysis intraday. Also, for the 24 key futures, if you trade futures or those futures ETFs, amazing analysis that you can get. And you have to, for level 4, you have to be a thinkorswim account holder. thinkorswim is our proprietary favored broker, and so if you want to get those charts, you open up a thinkorswim account, and you can try us out for half price, $73.50 for a month. That will give you our level 4 charts, level 3 rankings and trade setups on those same symbols. 400 videos you can learn like crazy and binge watch. Our SIR stock index report and our ETF report, really good. We did some amazing work in this last week in our stock index report. In fact, we nearly had a bullseye on the numbers on the Russell. You're going to want to go look at that. Though we were close on all the indexes, that was really fantastic work. So and one of our analytical assistants, Matt, gets a lot of credit for that also, putting those numbers together, and you're going to find that to be phenomenal. We do a ton of work on momentum too. So $73.50 in order to get a month's trial, and a little later on I'm going to tell you about our level 2 trial, which if you're not interested in the charts, you're going to be interested in that. Let's now switch over and look at these charts where we look at the first big gainer for the week, which is Seagate. This is a very interesting pattern. I'm going to walk you through our cycle analysis on here so you can see what we're talking about. First of all, chart patterns are formed by cycles. You can see the low here, and the low here, and the low here. They go from low to low is how we measure them. This chart pattern, which is a left shoulder and a head and a right shoulder, you could see is formed by these cycle patterns. And the head and shoulders top was formed, and the measurement was down here, and you could see how that, well, practically made a bullseye. Now we've had what we call a positively configured pattern. In other words, this cycle rallied almost the whole time up and then fell sharply. Well, that's what I just told you about the stock market, right? Then, because there's only a little bit of time left in here, it began to rally again. This is a bullishly configured cycle. You can see our green arrow there depicting that. And now had this big up week. This stock up 9% on the week. Earnings beat. The revenues were down a little bit, but analysts still loved what they saw. It's a great pattern. And you can see our fib extension target zone is up here to about 56. So we believe that if you were able to get a little dip in here, you're going to get a nice buying opportunity, because we think the odds are high. We are in this rally phase right over here, which should lift the stock up for quite a number of weeks. So that is Seagate, STX, in a very nice pattern. Now, Tesla was a big gainer this week. TSLA. Of course, many of you watch and trade this, Tesla. And this stock, we believe, is bouncing in a very bad pattern. Our target really has been under 200 on the stock. We've been really bearish on it. And now we think it's just in a bouncing phase right over here. We're looking at this rally phase right here. Now, either this was it and it aborted, or it started really a little bit later. That doesn't matter to us. We see it ticking back up over here to about 267. That's likely. 7% gain on the week. It's up because it's raised $2 billion. If you look at that, it needed to raise $2 billion because of their cash burn, because they really are a poorly managed company. And we think it's a temporary bounce. So you might get a little more rally in here, 13, 14 points. But then we think it's likely to be moving down again. 7% gain on the week, and we don't trust it at all. I'm still looking for sub 200 on the stock. CVS is the next one we're going to look at in here, and this is interesting, and you could see the beautiful cycle patterns in here. Now remember, what you're looking at on the bottom are the ideal cycles, as if it rallied up half the time and sold down half the time. Well, this cycle almost did that, but you'll note that it fell and much lower than where it started. Negatively configured cycle, negatively configured cycle. That was pretty beautiful. Then it built a base in here. It gave you a positive cycle, which said the odds were better than 75% that it was going to surpass that level right over there. You see it easily did that. Then you had these double sell signals right over here, and the stock broke, and again, negatively configured. That said, it would rally, but rally into this resistance zone and fail, and that's exactly what it did. It hit the fib extension target zone. I showed you one on the upside a few minutes ago in Seagate, and this was one on the downside, and then began to rally. So if I take a little closer look in here, you'll be able to see very clearly in CVS that this stock looks very much like it's entered into the next rally phase. However, this group and healthcare is in a lot of trouble. And I'm going to show you Cigna when we get into the worst of the week. And we think that the rally in here only really gets up to this 59 to about 61 area, and then rolls over for another hit on the downside. Of course, they bought Aetna, and they bought Aetna at a time when even the Republicans are going to be attacking this group and the healthcare, and you know what the Democrats want to do to it. So this group really in a lot of trouble, and everything in healthcare I think is going to continue to be stair-stepping on the downside. This rally comes right on time, but again, we don't think it's going to last very long. That is CVS, earnings beat, up 6% on the week. Hewlett-Packard, HPQ, is the next one we're going to look at. And this one, another one. You'll notice I'm showing you stocks that have been breaking and then bottoming. This has colored phasing in it. So we have some of our things that we do this way because we want to even give a better illustration of positive and neutral or correcting or negative patterns. This is very important, where you see that this cycle low broke. When that happened, it turned it into a red zone, which means it's very susceptible to the downside, and you can see what happened. In this case, it broke it, but it didn't really move down very sharply, got into this time period for the bottom. You could see between those 2 points right over there, which are suggestive of the low timing, and then moved up pretty strongly. 4.7% gain on the week. It's in a bounce, but we're going to be putting a resistance zone in here. Like this one was the sell zone right there, and it nailed it and then collapsed. Well, there's one coming up right in here now that we have a bottom in place, and we think it's going to rally for some number of weeks, but then likely be turning to the downside again. No significant news in here. It reported earnings way back, and the earnings will be coming up again late in the month. But the stock does get a bounce, and we don't think it's going to last real long. TTWO, Take Two, this stock having a good day in here. It moves up about 5% on the week. Analysts upgraded the stock, but look where it's moved up into, the sell zone. And I want you to note that you can see how long this rally lasted when it hit this sell zone. Well, that was about 7 weeks right there. This one is about 9 weeks right now. So when you get into these negative cycles and stair-stepping its way down, you usually don't last very long in these rallies, and you spend the last 4 or 5 weeks in these patterns falling. You can see our fib target zone right over here, down around 78, 79 is where that starts. So this stock is 102. We think it's got a lot of danger from this level. And though it's up this week some 5%, and analysts upgraded the stock, we say no to that, and we think it is a sell. So those are the 5 very key bullish stocks that were the best of the week. You can see we're not really loving some of those. We're going to be right back, and I'm going to show you the 5 stocks that were the worst of the week with some opportunities. All right, for the worst of the week, well, this stock totally decimated. That is in the industrial sector, and that is Fluor, FLR. Stock down about 25% on the week. This is a nightmare, and again, beautiful cyclicality that we see in here, and failing from the exact zone that it should. So that sell zone put in there, and it's based on our swing high, swing low analysis. And we have about 3 videos in about the swing high, swing low analysis and how that works. And you can see in here, the stock rallies up for most of this cycle, and then gets to the end of the cycle and the energy just releases on the downside in a giant way. This was an earnings shock, as they expected 50-something cents to the plus side, and it actually lost money. This does not bode well with a giant gap. You would be able to see that on the daily chart, because this is a weekly chart, and we do the core of our work on weekly charts. And so we're looking for a bottom to form in here, in the next week or two, but then a bounce, and maybe that bounce gets you to 33 to 35. It's possible, but this is a lot of danger in this stock. And you can see in here, this is a negatively configured pattern, a negatively configured pattern. The best the stock could do is base out in here after rallying, but overall, this is really poor performance. And when you get that big loss like that in a shock, well, investors want out of this one, and that's why we don't think it can bounce very far. I think 33 is really optimistic when I say that, and we'll see what it can do after that, but not a good pattern when you look at that at all. 26% down on the week. The next one we're going to look at, CTSH, which is Cognizant. Look at that. Again, this is a fib 61.8% fib confluence. That comes off of these 2 peaks right over here. Pretty good return that it made it up to there after this big negative cycle. Whenever you see the dotted blue like that, it shows you that we believe there's been a shift, in this case a slight shift to the right, that you can see on how these cycles align, because this elongated. Cycles get longer on the downside because sellers are relentless. And when the stock is bullish, it tends to make earlier bottoms, like you see right over here and like you see right over here, because the buyers are anxious. So sellers, in this case, there pretty strongly. And then it finally did better, hits the fib resistance zone, and then collapses in here. Cognizant, 17% down on the week. Earnings, a big miss. Guidance, very weak. That huge gap is trouble. We think it's got another month or more on the downside before it then tries to rally, but again, we would think it would be a modest rally and then moving to the downside again. So floor, a broken stock. Cognizant, a broken stock. Now Google, the question is, when you look at this, is it a broken stock? Well, it doesn't, didn't mean to go all the way out to that. That's the daily chart with all of that information on the right. And you can see in here, look at the massive engulfing pattern that you see right there. That engulfing pattern is just huge, and that makes a very important top. Now again, we're following cycle rhythms. Look right over here. We have overlapping cycles over this minor cycle that you're right in here. So there's 2 dominants. There's 2 dominants and a minor cycle, and they bottom here in the nested area, and then it rallied through this time frame right over here and broke. Now you can see this decline goes down, well, to the same time frame that we think that the stock market goes down, late May, early June. We're looking for 1135, it's now 1190, as a best case, with a potential down here to 1095. We think Google is a screaming short now, that this top is made. And then if it rallies out over here, we think this cycle is going to grab it, and it's going to get hurt again to under $1,000 later in the year. So this is a very, very bad performance in here. The worst day in 7 years for Google, as it drops 100 points, makes this big double top right over here very significant. There is more to come on earnings missing, revenues missing, analysts downgrading the stock, and clearly growth slowing for this absolutely giant stock that looks to me completely done. I don't think that you'll see these prices again, as it's got up here around the 1300 level twice, and now I think the target is much closer to 1100 for the near term. in Alphabet or Google, whichever you prefer calling it. Cigna, a CI, the next one right over here. Look at that. I mean, I talked about CVS and the healthcare group. Well, this has got annihilated. And this annihilation you see in here is the Democrat effect. And when you start talking about Medicare for all and taking over these companies, well, investors don't want any part of them. We had a rally in here. Now, I want you to note the nesting right in here. Note the nesting right in here and the low that you can see. The nesting right in here, 2 cycles make a bottom and the low, and they rally. That's where we are right now. So you can see our projection is for the stock to do better for the next month and a half. It's just a dead cat bounce. The stock could make it up to 170. And as investors look for bargains, especially in this group, and maybe the polls start to show the nonsense from the Democrats, and the stocks do better, but before you know, the stock will be moving down again. We're looking for a rebound, and we think this dip this week that we're getting is a good opportunity. Now, the stock down 5.5% on the week. It beat on earnings, revenues beat, guidance beat. It's weird that we had this big downside right over here, and we think that when the stock rebounds, investors should sell it. But in the meantime, if you're a trader, this is a high probability entry to look for a move from 150 up to potentially up to 170. You see this 13-week moving average coming down? That's coming down to, let's say, 165, 170. It's a pretty good target there on the upside. So I hate the stock. I really think investors should sell it. But I think that for traders, you can look for some upside in here. Clorox is the 5th one we're going to look at of the what I think are the most interesting. We believe that this is a major top that's formed. Now, note this big wide cycles. These are very large. And as a matter of fact, there is a half cycle in there that I'm going to show you. So I'm going to duplicate this right here, and I'm going to bring this in and put the minor cycle in there for you to see. So there you can see that actually each of these bigger cycles is made up by 2 halves. Here's one right here and one right here. Really perfect when you look at that, and one here and one right in here. So you can see these 2 nesting right in here making a low. But note that this low right over here is the same. It's very similar. So giving up all of that ground makes it very likely that the next rally will fail and then come down. See the head and shoulders potential forming in there? This stock, though it could be a defensive stock, if the market really starts to do poorly, really looks the very top to me. Down 6% on the week, earnings miss. Analysts lowered the targets on here. A low is due in the next few weeks, and then likely a bounce. But I think if you got the bounce up to about 155, I think then it is a sell. Clorox, we'll rate it. For the very short-term traders, you can look for a bounce, just as we said in Cigna, but overall, these big breaks, I think, are telling you that the stocks are in a lot of trouble moving forward. That is the 5 worst for the week. And I'm going to be right back, and I'm going to show you our short-term view for the coming week. All right, short-term view for the coming week. This is different because what I do is I look at how we did the last week. I look at daily charts, and I look at cyclical patterns and momentum. And I rate how well I've done based on 3 or 4 different categories. Did the momentum hold up? Did it hit our targets? How did it act around the support resistance levels we expected? And the net change for the week. So there's a lot of criteria that I rate myself on, and I go pretty hard on myself. I want to be very realistic. I would say that this week we're going to get about 65%. We were bullseyes in light crude and the gold market. We were close in the dollar market. We were just a bit off on the pattern on that. The bond market, it didn't fall as deeply as we expected it to, though the pattern held up pretty nicely. We expected the stock market to dip, but it didn't quite dip as far and then rally again. And we thought that what we saw on Thursday and Friday would have happened more like Tuesday and Wednesday. So we were a little off on that pattern, but we get about 65%. and things may be setting up for the stock market that look a little bit more dangerous. If you want to get our stock index report, and I just told you earlier in the show how well we did in that stock index report, and our ETF review, just amazing things that we look at in there. We give you important numbers, we give you all of the momentum, we make great comparisons in there in the stock sectors. Great stuff. And 400 videos. You're just learning, or if you're an advanced trader, there's something in there for everybody. Trader psychology is just immensely important. We've got a lot of videos on that. We have almost 80 different videos in the charting, tools for text category. We do stock sectors, and this last week we did a great stock sectors video where I show the financials and make important comparisons of the S&P 500 against the XLF. Really an important video for you to watch. Great opportunities coming up in the banks again pretty soon for traders. You want to do that. You want to check that all out. I just said level 2. You can try that for just $18.50 for a whole month. Just if you want our trials, just write support at askSlim.com. Ask them for the trial that you want, the half-price trial. You don't like it, just cancel it. In the meantime, get everything you can out of it for a month. And you're probably going to want to stay because it's just great information. So please do become a trial member for level 2. Even if you're not interested in our charts or our rankings and trade setups, this is a ton of important analysis and information that's really going to benefit you. Level 2, $18.50 for 1 month. All right, so now let's get into our short-term view for the coming week. Well, we have a really important time frame here that we're going to be looking at in the stock market again as we get this very sizable move to the upside. But we're going to start by looking at light crude, CL. Let's look at the good ones, the really good ones first, as we expected that light crude would fall and that light crude would get to about the 61 level this week. And you can see in here that that's basically what it did. I mean, it hit this support zone right there. The low for the week right there was about 60.95 or something like that. Our target was 61 for the week, so we're going to call this one a bullseye. For the next week, and if you want to know what this is all about and why it's falling, well, first of all, technically, you can see 3 cycles coming down to this nested area right there. And when you get that, you get into a corrective mode. And on top of that, OPEC was trying to raise prices, but the U.S. frackers are going crazy because the price got high, and that's what we expect. So U.S. supplies really up their production very strong, and traders are seeing that. Once you got under this level right over here, it was in trouble. This week points to either bouncing around in here and getting slightly under the 61 level, or falling hard to around 58. You can see that. I know that's a pretty wide parameter of projection. The scenario is suggestive that it could fall as low as 58. It's not likely that it falls that hard, but it could. But it doesn't matter. The time frame is what we're looking at. Cycle analysis is price and time. So we believe that we're in a period of risk. We would not believe any rallies in this next week, and we think that it could fall pretty low. Even this number down over here, the lowest number is about 57.80 that we're looking at right there as the worst potential on the downside. So we're going to look for a down week in there. Momentum, which was super strong, and we're very conscious of momentum in here. Sorry about that. Is something that we want to focus on. Now, momentum turned positive way over here. You can see that green arrow based on the slim ribbon. And each of these minor cycles tracked on the upside, you can see how I'm following the minor ones on the bottom without violating. In other words, the momentum stayed strong through this whole time. Slim ribbon is a very important study for you to put on your charts. Become a TOS member. This breakdown came over here, and note the little blue arrow there. That is the first time since it turned positive way back in January that the momentum has changed. And by the way, the stock market has had the momentum upside since a similar time frame and has done a similar thing, though has not given a negative signal yet. So this is the first negative signal that is an enhancement to believe that this next week is going to be on the downside. So even if you're not a light crude trader, you can learn a ton from this. Also note the 89-day moving average coming up right to that same area of about 57.80, which is often a target or a magnet to come down and touch that. So that is light crude. We're going to call for another down week as momentum has neutralized. Sell the rallies is what we believe. The gold market /GC, and I have to come in again in here for you to see. What we said was that we thought gold would fall to between 1266 and 1246. Well, this low right over here was 1266. We're going to call that a bullseye. Note the up day right over here, and this is actually engulfing. Even though I think that there is another week or so of risk on the downside in here, as you can see, this is really saying that it's going to be hard to get under the 1266 level. Like, that's where the buyers are coming in. And this is the weekly support from the intermediate chart. So we're going to look for modest downside in here and maybe a little bit of chop, but then late in the week or next week is when we think it really starts to turn up. We're going to look for a small change really in the next week. Note the momentum turned negative here, and look what it got you. All of this weakness, and this is really key, right down to the support level. So again, slim ribbon really speaks. The slim ribbon never misses a big move. And that's the key, understanding where the highest probability of impulses in either direction may come, and that really helps with you. You can look over here where the slim ribbon was positive, and these big upward impulses, and the slim ribbon negative, and the big downward impulses. Just incredibly good study. And we get help off the projection oscillator on the bottom, and please watch the video about my favorite study pair, slim ribbon and projection oscillator. So that is GC. We're going to look for really a small change on the week, still negative momentum, but setting up not too far out there for much better. Take a look now as we look at the dollar market, $DXY. So what we thought was going to happen in here was that the dollar was going to chop around and move lower. Well, it basically followed what we expected. We thought it would be a down week. Momentum still positive, so we thought it would hit these support areas in here. Our projection was 97.70 to 52. It got way down over here to 97.13, so it was a little weaker even than we expected. But note that the slim ribbon did not change, so the internals are still strong. It's flattening out, and you can see what's going on here, this reversal today. And this reversal today is about the dovishness coming out of the Fed speak, and we're looking for lower prices again. So we're going to look for, if there's a little chop in here, okay, but we're looking for a down week in here. We think it's going to test that 97.50 level again, with a potential of getting down here closer to 97. So there's really a high probability of a decline in here. And when you look at that, you really have to be suspicious about what we just said in gold. How much more time is there to decline? This is all a risky time for the dollar. It's all going to be a good time for the gold market. I give you probabilities. I never give you buy or sells. I just want you to figure that out on your own so you could take ownership of your own trades. And I'll give you the best analysis that I believe I can based on what I see here. So we believe that intermediate is very risky, test 97 again, and we're going to look for a down week in the dollar. /ZB is what we're looking at right now, which is the 30-year. Now, this is a little bit confusing because of the yield curve moving around so much, we have lows in different areas in the 10-year and in the 30-year, and even in the 20-year. 20s and 30s are trading pretty much alike. What we're looking for here is a decline, and both there's two scenarios that you can see in here, and they're both very similar. You could get a little more rally and a little less decline, but we think overall that the market is going to start to move up again in this area out over here. Of course, that's where we think the stock market is going to decline. So I'll show you that in a few minutes. So we're going to look for the market to give a little ground early in the weekend here and then begin to move up again. We think it's going to be a small up week based on what we're seeing here. There's a potential for it to get down and test the 46.06 level before it starts to move up again. I'm getting a sense that it's not going to do that it's more going to take the higher track in here, and that this area right over here for traders could look for the long side one more time. And again, you can see our projection back up over here towards 49, and we think that's in the time period that the stock market is likely to be correcting. Momentum in here, neutral. You see how close the ribbon is in here? It doesn't give signals. It gives you the signals when it starts to widen, and then you know that you've got momentum going on. Here, where it starts to narrow and chop, you're in an indecisive market, and you can see that right here. Really great value in what we're looking at right over there. So that is a look at the ZBs. We're going to call a small up week with choppy, tight momentum, not giving a lot away right now. So the stock market, like I said, we did expect that the stock market was going to have a dip into the midweek and then rally again. So we didn't think there would be a lot of change. We thought it would be a small week, and that's really what we got with the market basically into the midday period being pretty mixed. With small changes. So that worked out okay. It just didn't dip as deep as we thought that it might. Well, let's take a look at that. Maybe it did. I thought it would dip to, I just think the timing was off a little bit. I thought it would dip down to the area of 29.12, but I thought it would happen here on Tuesday or Wednesday, and it did it a little later in the week. So it kind of looks like this cycle shifted out a little bit. Now we're in this little rally area. That would push this decline out a little bit later than we have it right now. But what we think is that the market is going to chop a little bit maybe in this area, that this 29.54 is likely to be the failure point. It might get through it by a little bit and then turn lower, as you can see in here. We believe that the risks are starting to really grow right now as the intermediate patterns are getting late for this sharp correction. The later it gets, the sharper the correction and shorter the correction usually is. You can see in here that this slim ribbon giving you all of this upward positive momentum. It hits the minor support down here. We thought it would get down to 29.12. It got down a little bit lower than that. I only gave myself about 2/3 credit for this, but maybe I should have got more. And then getting this pop here on Friday based on Amazon and the Fed heads and the employment numbers, and I don't think it's going to last long, and I think it's going to fail. We're going to call this a down week coming up, and I think that the risks are growing, that it's going to be a significant decline right now. And for the moment, we're going to target in the next week or week and a half getting down to this area right over here, just under 2,900. Getting under that 2,900 is going to be have a slight importance right over there. Again, the slim ribbon, we're going to be watching whether or not that can give you a negative momentum reading at some point in here. And then you could see out over here is the time frame where we think that the biggest risks are. So a decline and then a rally that fails, and then big down. You can look at this right over here to project. In other words, to give us a time and the time frame to mid-June when that points to a low. So the corrective low that we're expecting is in mid-June, and we think that this engulfing that you see right over there, which you can't really read because it's behind that number, is the beginning of the reversal going on right there. So market very strong today. S&P's right now up about 27, and we don't think that's going to last. We'll look for a little more chop in here, and then the market moving down, and we're going to call for a down week. We expect it to again test near that 2,900 area in the next week. which is going to be sort of a negative signal, but the real negative signal doesn't come until the slim ribbon turns at least neutral and then negative. And then out here when some rallies begin to fail, which is later in the month. So overall, we think the risks are higher and that the reversal that we saw Wednesday is actually meaningful. Make sure that you watch Future Speak on Wednesday, and we showed you the VIX patterns in there, and those are some magnificent cyclical charts that are pointing to a move in the VIX, and that's another thing that we think is just starting. So that's kind of an enhancement to this analysis. So please do become a level 2 member if you are a free member, or if you're not a member at all, and take that trial, and I think you're going to find the information to be absolutely valuable. So great stuff, and your support really helps us bring these shows to you every single week. That's it. I want you to be so careful. It is so crazy out there. I'm always wishing you great trading.
Well, I'm going to say